Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here's your daily technical analysis of Brent crude oil and spot gold. I'll start with ICE Brent crude oil futures. A second bearish black crow yesterday, and a more than suitable follow-on lower to the previous session's combined bearish engulfing pattern and bearish opening black Maribozo. The market punched down and closed below the neckline of the October to November 2021 head and shoulders top, currently at 94.43, as well as the broken upper bear channel line, currently 93.33, and also the slowly declining short medium moving average, currently 92.99. I've previously spoken a few times about the twin bear channel idea I had for this market. You see, we had a late July to date bear channel, currently 96.15 to 93.33, which had until 2 weeks ago been running the market. The move up last week and the week before broke this smaller of the two bear channels with a clear close over the declining medium moving average overhead, currently at 97.38. Yet this had not been sustained. It had not been sustained, and yes, they saw the close back below the upper bear channel line, as well as the short medium moving averages. Now, prices halted just a little ahead of the lesser Fibonacci line at 92.07. I'd still like to mention once again the second upper bear channel line, something I had oft repeated. Both bear channels have the same lower bear channel line, which is currently 76.15, originating from late August, but the second larger bear channel utilizes the March to date downtrend, currently 103.90. The issue that clogs this idea is that just before the trend line we have a congestion band between 101.55 to 103.35. which has lurking within it the ever so slowly rising long moving average, currently 103.27. There is one other pattern, an important one, that I wish to highlight, and that is where we are currently set for a possible weekly key reversal here. Thus, if we close Friday night either over 98.57 or under 95.77, then we'll be on. Any close in between will have a lesser outside weak pattern, at the moment looking like a weekly key reversal down. So far today, a limited attempt lower to test the lesser Fibonacci line at 92.07, just creeping below it. I'd argue whether it's been breached or not, but it's definitely creeping below it. Underneath this support, that we have limited support until the mid-October low at 88.77. Spot gold. A limited follow-on high yesterday to the previous session's daily key reversal up. Yes, prices did move higher, but we ended the day as a bearish black crow. There were two main reasons that the top side was capped. Firstly, the declining medium moving average, currently 17.13. This market had been running a parallel lower and helping with the upper tine, currently at 16.97, of the broken June to August bearish fish fork. The second reason for the overhead was a September 2021 low at 17.21. Being so close to the broken upper tine, I'm sure that they offered each other, how shall I put it, mutual assistance. Interestingly, the downside was actually supported yesterday by the broken upper tine. Overall, the action since September is reminiscent of a triple bottom with actually a double bottom slotted in within it, formed over October and November, early November. For the smaller double bottom, one could look for a move up to the 17.45 area, whilst the triple bottom, well, that really isn't triggered as yet. And will depend a lot on the market moving up over the 17.30 area. But that will be a lot tougher, as further overhead we have the congestion band between 17.79 and 17.88 that looks formidable. Finally, this brings me once again to something I've been talking about for months. You see, there is still an argument for the December 2021 to date action being a possible really big head and shoulders top. We've already reached the primary target where the interesting March 2021 low is at 17.76. However, we still have a harder to achieve secondary target down in the 15.60 area. That was actually once below the bottom of my daily chart, but now just sitting there at the lows. I am now having doubts about this extra piece on the downside, especially if prices close over the upper tine and over the medium moving average as so far today. Well, not yet. So far today, well, nothing much capped by the declining medium moving average, and not really that interested just yet in testing the downside support. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.